Hi guys, Steve Crawford from Your Spending Coach, and today I'm just going to run through our virtual banking and lending specialist offer. First of all, obviously there's a disclaimer that any information contained in this video is general in nature only, that Experience Wealth Trading as Your Spending Coach is a credit rep of AFG, and Sarah Michelagic is our credit representative. So first of all, I suppose the first question is, why would you bother using a virtual banking and lending solution? A lot of our coaches that have gone through our program have said to us that the two things that they need help with when they get back into the office is around the money management side, so either with Xero or with MoneySoft, but also with the banking and the lending side. Some of their brokers that they've referred to in the past have been great at the lending stuff, but not so much at the banking, and having an understanding that banking is part of that three-pronged attack to help your clients get a great outcome, included with budgeting and reporting. Obviously banking plays a large part in that. You might also have clients that you are actually ready to go with, but you don't have the skills in-house to do this yourself around the banking side or the lending side. We're a team of experts, so we've been doing this in our practice for 8 years now, and we've developed the specialist lending side over the last 2 to 3 years. You know that if you're working with us, any of the preferred banking and lending partners that we recommend to your clients can actually implement a spending coach ideal banking model. So this is the ability to separate accounts out into spending, storage and savings, the ability to link credit cards and debit cards to different accounts using different buttons, ease and simple use. So this is what you know you're going to get for your clients every single time, which is going to increase the chances of them hitting their targets. Also, fortunately, in most of the instances, the cost of the service is actually covered by one of our preferred banking partners through a loan commission, if that's what ends up being implemented. The whole point of doing this is to teach your clients that getting a great banking and lending structure, it goes beyond the rate. I mean, they might come to you saying that they want a good interest rate, but what they really mean is they want to pay the least amount of interest on their loan. And whilst the rate is a component of that, it's not, in our opinion, the main driver. Their ability to have spending and savings targets and then hitting those consistently is going to have a far greater impact than a 0.1 or 0.2% rate reduction on a loan. They need to therefore understand how to use their accounts to help them hit those targets each month. So how do we help? We'll provide them with advice around the best structure to achieve those spending and savings targets, which obviously helps them reduce their debt faster. And then Sarah will source the best lending and banking solution to suit their needs. 4 components of what we're doing for them. Banking and lending plans, the first one. This is what it's designed to do. So when we're having this conversation with your clients, and I'll go through the structure at the end of the process, we want to teach them how home loans actually work. We're not just going to give them a structure and say, here you go and do it. We actually want to understand a little bit of psychology of the way that they like to manage their money as well. This is about knowing how many bank accounts they should have. Is it 3, is it 6, is it 9? How many spending, storage and savings accounts they actually need. That's going to help them feel comfortable when they're managing their money. We'll then review their current structure to see what they like and don't like about the way they bank today. Give them an insight as to why we'd make a recommendation around spending, storage and savings accounts, and obviously it's designed to take years off their mortgage if they're in that mortgage stage, or if they're about to start a mortgage. Again, this is about teaching them how to use offset accounts and things like that properly. So after we've given them an insight into how we actually structure their lending and why that's beneficial for them, we'll give them a chance to explore the way that they want to, I suppose, tailor that setup with the use of their spending, storage and savings accounts. Finally, a high-level recommendation and structure diagram designed to help them achieve their banking and lending goals. The valuation is the next step. So this is obviously for their existing properties, not for a new property that they're looking to purchase here. So if this is a refinance. The point of this is that a lot of these days, them trying to work out what the thing's actually worth, they've got an inflated opinion because of their owner bias. Real estate agent, well, good luck trying to get a good value or a fair market value from that. So what this does is it tells you that the valuation that you get back is highly likely to be around the same mark that the bank's going to ultimately land on. That then gives them the first of the two criteria that all lending partners, not just our preferred partners, are going to use to determine how much they're going to offer as a limit. With those details, then combined with their income and expense details that they complete in their budget, that's going to enable us to source the best terms up front from our panel of preferred lenders. Obviously, those best terms are going to include the rate, but the lending limit as well, how big of a discount on the rate, and any other features that we can access through the products. Then you move on to your assessment. So from here, it's designed to show them how much they're actually able to borrow. Obviously, a refinance, they might not be looking to take anything more out, but a brand new purchase, then they probably are. The rates that are going to be offered, a comparison between the different lenders, showing them their current lender if they've already got a loan as well, and then comparing that against our preferred partners and excuse me, and what we'd call our ideal solution. If required, their credit proposal and preliminary assessment then kicks off, which enables us to make a recommendation and their best fit lender. So what's included in that recommendation? By getting the recommendation, it basically says that you've got choices and options. They can choose to do absolutely nothing, stay exactly where they are, and maintain their setup as it is. They'll actually probably go back to their lender and ask for a discount anyway. They can stay with their current lender, but improve their structure by adopting what we call the YSC ideal setup. If they do that because we haven't instigated the loan or initiated the loan, they need to do this themselves, and we're unable to actually help them to do that. If they want to implement our ideal setup via our recommended lender, so assuming this isn't their current lender, and they want us to manage the process from start to finish, that's an option. And the point of this is that across the board they've got options. They don't have to refinance if they don't want to. They can choose to implement under their current lender, or they can go to an alternate lender, or they can go to a new structure within the current lender. There's fees associated with this, and in most instances the fees are effectively waived where the loan that they're taking out through us, so this is a brand new loan or a refinance loan, is $350,000 or greater. So if they want us to actually help them structure their loans through their current lender, then they'll obviously pay that fee, $330 for singles and $550 for couples. If we refinance their loan to a new lender, or we create a brand new loan and the loan's greater than $350,000, then they're not going to be charged that fee. Their pack includes the banking and lending plan, and the meetings are associated with that, the lending assessment, the internal property valuation for existing properties. If they want to do more than one, then it's $50 for each property, and then the recommendation and implementation the whole way through. So these are all the steps. After you've referred them through to us, and we'll give you a templated email that you can use to send through to them with another video, which is very similar to this video, but it's just tailored obviously to speak at a client level. We'll have a quick 15-minute online meeting with them to help them, or to get an understanding of what they're looking for, and then show them our process that we go through. So this is sort of a pre-commitment meeting for them. Then if they want to come to the meeting, go to their banking and lending plan meeting, then they'll complete and return their lending calculator, which is a really simple budget, same budget that we use in the Spending Coach program. So income, expenses, assets and liabilities. They'll sign a credit guide, which is just like a credit fact find. That then enables us to have a 60-minute meeting with them. So it's done either in person or online using GoToMeeting. At the end of that, assuming that they want to proceed with our help. So at the end of that meeting, what they understand is how much they can really afford to borrow, not just what the banks are going to lend them, an understanding of the best lending structures for them, some sort of gauge as to how fast they could pay their home loan off as well using our home repayment calculator, and what the mix of their spending, storage and savings accounts are. If at that stage they choose to proceed with us, they'll return their signed payment authority. We'll prepare and present a lending assessment in a 30-minute meeting, again done in face-to-face or online. Finally then, assuming they proceed through to the structuring or the refinancing, we'll help them apply for and implement their best fit solution, all the way through to settlement, out the other side, They'll actually get a quick meeting with us to make sure that all their online banking is set up, their direct debits are set up to their different spending, storage and savings accounts. If you want any more information, give us a call in the office, email Sarah, and of course if you want to know more about Spending Coach, visit the website. Thanks for watching and hope to be talking to you soon.